Hi everyone, I'm Mark Taylor from Chartergate Legal Services and welcome to another video on the joint and several liability umbrella reforms. For this video I've got my colleague Zubair Ahmed with me and we are going to be looking at the topic of payslip audits and what exactly is their value when it comes to the new reforms. On the subject of payslip audits, we know that they are very big in the marketplace at the moment. A lot of people are turning to them as the solution, in their words, to the joint and several liability reforms. Why don't you take us through what your view is with regards to that?
I think the first point worth making when it comes to payslip audits is you can't really say that they are a bad thing, right? Whether they're sufficient or not for the purposes of these new rules, I don't think anyone can say that they're a bad thing because they do provide transparency with regard payroll compliance. And like you've mentioned, there's a commercial need for them.
Yeah.
Because usually the companies who subject themselves to these types of checks, they're doing it because their clients have asked them to have these checks in place.
Okay.
I guess the real question is, what are the limitations of payslip checks when it comes to Chapter 11 or the new rules that we're talking about?
Okay.
So one of the most basic sort of limitations that come up, which actually has been addressed by a lot of companies, is that all payslips do is show the amounts being paid to the individual and the amounts allegedly being paid over to the revenue. But there's no evidence of that.
Okay.
So a lot of companies have already addressed that issue by looking at what exactly has been reported to HMRC using RTI data.
Okay.
And the payments by using bank statements or HMRC screenshots to evidence that the payments have been made.
Okay.
So putting all of that to aside, because everyone's going to look at Chapter 11 and say, yeah, but we've now got confirmation that PAYE is being paid.
Yeah.
But what they're missing, I guess, is the fact that this legislation looks beyond that aspect.
Okay, Zubair, so you've told us the parts that payslip audits can do.
Yep.
Why don't you go through some of the things that, in your view, are a limitation to payslip audits?
Sure. So I think the best way to explain this is to imagine a basic payslip in which we have a total taxable amount, the gross pay as it were.
Yeah.
And usually payslip checks would assume that figure is correct. And it would then calculate the income tax and national insurance and any other relevant deductions there might be from that figure, right? But in actual fact, there might be other elements which are important here. For example, there might be non-taxable elements. The most common one being expenses.
Yeah.
Now, with expenses, if it were to show on a payslip that there was a non-taxable element, X amount belonged to expenses, the likelihood is that payslip check would assume that that was correct and therefore calculate the income tax and national insurance on the taxable element.
Okay.
But there's no step there then to verify whether that non-taxable element is in fact correctly treated for tax purposes or whether it should in fact be taxed.
Okay.
And I think that's a significant limitation here.
Yeah.
Because if HMRC come out and they look at the expenses and they determine that actually, no, these have been reimbursed incorrectly, then you've got a situation where there is a PAYE liability because it should have been taxed. And full circle, we end back up at joint and several liability because we've now got a PAYE liability there. So I think that's a significant limitation.
Okay, so I think what you're saying from that perspective, if I can summarise it in my mind, is that you've got different stages to the process.
Yeah.
You've got what happens before the money gets to the payslip.
Yeah.
And then what happens at the payslip stage and what happens after.
Yeah.
And we're saying that from what we've seen, the payslip audits can look at the part when the payslip's being produced and the payments, but they can't deal with the due diligence necessary for what happens before the payslip, how that gross figure is reached in the first place.
Yeah. And that gross figure that we're talking about there is obviously made up of different elements. So we've got a taxable gross figure, and then we might have a non-taxable element. So it's important to be able to distinguish between those two elements.
Okay, yeah.
It's the non-taxable elements which I think the greater limitation applies to,
Okay.
because no one's verifying whether that has in fact been paid correctly in the first place,
Yeah.
which could then in turn lead to a PAYE liability.
Okay.
Take, for example, a more complex situation, perhaps an umbrella company payslip.
Yeah.
When it comes to umbrella payslips, it might be broken down into two sections.
Yeah.
One might be what's titled as a company receipts section, and
Yeah.
the other the employees payslip section.
Okay.
When we look at the company receipts section,
Yeah.
it will have various items within that section. For example, we'll have the margin, but beyond the margin, you'll have other costs, such as the employer national insurance costs, perhaps the employer pension contributions.
Okay.
If they've got retained holiday pay, there will be that element shown in the company's receipts section as well.
Okay.
If there's non-taxable elements, such as the expenses, that might also appear there. And when you have a payslip check, the likelihood is those figures are not being verified or checked,
Okay.
because it just starts from that gross amount
Okay.
as being what's payable to the individual, and therefore this is the amount of tax and NIC. So there's another significant limitation there, because if there's any issues within that element, that could in turn lead to an underpayment, if you like, to the individual,
Yeah.
which then would have been taxed. And again, we would have had PAYE operated on that amount that's been underpaid. Another limitation is when you look at those umbrella company pay slips, or even a normal pay slip, that gross, the taxable gross now, that's made up of the agreed rate multiplied by the number of hours worked.
Yeah.
A payslip check would again only really start by acknowledging the gross figure and then calculate the tax and NIC from that. But what it won't do is identify what is in fact the agreed rate that's payable to this individual, and how many hours has this individual actually worked.
Yeah.
Because in truth, without using timesheet data to verify the hours worked, or without looking at the contractual arrangements in place to determine the actual pay rate that's been agreed, that information will never be verified.
Okay.
And that's a significant limitation again, because we've seen it time and time again from the audits that we've carried out, where it's the wrong rate that's been applied, or they've not used the correct number of hours
Yeah.
to calculate the gross pay. And when that comes to fruition, we're often asked, how much should they have been paid? And can we now ask the agency or the umbrella company, whoever it might be, to make that payment?
Yeah.
Which means, again, that payment will be subject to PAYE. And
Yeah.
again, we're back to joint and several liability, because we've now got a potential PAYE amount owed.
Okay. Yeah. I mean, and that seems kind of what we see on the employment tribunal side of things as well.
Yeah.
Where we've had individuals making tribunal claims for an hourly rate they say they weren't paid, which usually turns out to be the hourly rate that's paid to the umbrella company, for the margin, and sometimes for the employer's NI as well.
Yeah.
So I think what you're saying is, in those circumstances, if it's able to be shown that those, or argued that those elements were actually the individual's pay,
Yeah.
then nobody's operated PAYE on it, and someone in the contractual chain is going to be jointly and severally liable
Exactly.
for those mistakes.
Exactly. And that's what a payslip check will not be looking at. That's the kind of information a payslip check will not be able to verify.
Okay.
So, I think all of this illustrates the fact that payslip checks are not sufficient for the purposes of these new rules.
Okay.
But it's also important, obviously, to understand that there is no statutory defence anyway to joint and several liability.
Yeah.
So a payslip check will never provide anyone with a statutory defence.
Yeah.
And what we're really looking at, I guess, is the check in relation to exposing what risks might exist, so that we can address those risks.
Okay.
And if that's the mentality behind using a payslip check, then really we should be going much further than that.
Okay.
Because before we even get to payslip checks,
Yeah.
I think there's a whole host of things that should be done.
Yeah.
And these things will help mitigate any risks that are in the supply chain.
Yeah.
So let's take, for example, the most fundamental aspect of all of this is the integrity of the supply chain.
Yeah.
The relevant party, I guess, is the best way to term it. So the relevant party being the person who might be jointly and severally liable with the purported umbrella company.
Or umbrella company.
Or umbrella company. That relevant party should take responsibility for ensuring that they are comfortable with the supply chain. And what I mean by that is identifying who is actually in the supply chain to begin with, and what the responsibility of each party in that supply chain actually is. Once you've done that, I think the next step is to identify how the individual being supplied is actually engaged. Are they self-employed? Are they workers? Are they employees? How are they actually engaged? The next part then would be to determine what contracts are actually in place, whether they actually support that mode of engagement. Once you've been able to confirm the contractual chain and you've reviewed those contracts and you're happy that they support the mode of engagement, then and only then would you look at those contracts to determine the pay rates, the charge rates, the number of hours that's been agreed, all of that sort of information, before moving on to what we've just been discussing, which is the payslip check. But when we talk about payslip checks, we're talking about the entirety of that check, not just the payslip itself. So the payslip check alongside timesheets, alongside RTI data, alongside evidence of...
I guess assignment schedules as well, because they can often conflict, I think, with
100%,
terms.
100%. And there's a lot of other documents obviously flying around, particularly with more complex supply chains. You might have key information documents, assignment schedules. We've got all of these different types of documents which have different types of information on them. But all of it is relevant to what the individual is receiving at the end of the day. And all of that information needs to be looked at. You cannot just isolate it to a payslip check and expect that to provide, protection from everything.
So I think where you've got to here, if I'm understanding you correctly, is that before this legislation, if you were using a labour supply intermediary, whether you're the end client or you're an intermediary yourself passing it down the chain, you were essentially outsourcing the contractual element, outsourcing the payroll element, but also outsourcing liability. And now what we're saying is you can't outsource the liability.
No.
So you've got to take responsibility for it. And responsibility looks like payslip audits being one part of the process. But it is far from being the entire due diligence process you need to undertake. And if you only rely on auditing one element of the supply chain, the rest of it is an unknown and therefore a risk.
And I think the really key thing there is it's the relevant party that needs to take responsibility for carrying that due diligence process out. Because I think what's happening in the marketplace is there's a reliance on the supplier producing some sort of certification that all our payslips have been checked. But what the relevant party needs to do to protect themselves or to expose what risks they might actually find further down the supply chain is they need to undertake those checks. They need to put themselves in the driving seat. They need to formulate a plan and make sure they understand exactly what's happening in their supply chain.
And that makes sense, because if you look at it from the perspective of those parties have taken a back seat so far. And we're now in a world where we've got joint and several liability. So taking a back seat clearly hasn't satisfied HMRC.
No, exactly.
Okay, Zubair, so that's a lot of information, a lot of important information. Why don't you summarise the key points for me?
Sure. So I think point number one is payslip checks are not enough on their own to provide any sort of comfort, I guess, with regard to compliance in the supply chain. They might provide a false sense of comfort, but definitely not enough when it comes to Chapter 11. So building on that then, my second key takeaway, I guess, would be that payslip checks most likely fall within a very small aspect of the wider due diligence that's required. And not only a small part, but perhaps the very final part, because there's so many fundamental aspects that need to be understood before you even reach that element of the check. And finally, what I would say is that it's the relevant party So the person who's using that labor supplier, that should really put themselves in the driving seat and actually carry out that due diligence on their supply chain, rather than relying on the supplier to give them a sense of what their compliance might be like.